And I'm looking for what are the pitfalls that I can't see in front of my own self that might make me one day quit and go back to a job, because that's terrifying. Howdy. Welcome back to Dion Talk. Today, I want to talk about a subject that I only have my own experience in. I've actually gone on social media several times and tried to find a source for getting this information. But I'm actually curious, since I reached financial freedom by buying buy and hold rental properties and went from a really bad position in less than 10 years, made work completely optional. And now I never have to work again for the rest of my life, and self-managing my rental properties, which has made a lot easier because I use the property management system, Hemlane, to be able to manage my properties and possibly soon be living in Thailand while I'm doing that. So I might step up to a higher tier of their service. But I'm always curious, why do landlords quit? I was reached out to recently and asked, can you put together a video on your worst landlord story for a Halloween landlord nightmare video series? And I don't have any bad stories. My worst story is a phone call at 10 o'clock at night that took a few texts and an email to handle for financial freedom. So today I'm with Dana from Hemlane. She's the CEO of Hemlane. And since Dana is working with over 3,000 property owners that rent out their properties and has about 18,500 rental units on the system, I'm curious, with your experience, why do people quit something that seems so much easier than working and selling your life 1 hour at a time to possibly retire when we're not young enough to enjoy that retirement anymore?
That is a fantastic question, Dion. And there's two reasons why they quit that I've personally seen repeat itself over and over again. But before I do, would you ever quit? I mean, you said that you've never had a catastrophe situation. Would there ever be a time where you yourself would say, this is not worth it?
So I'm glad you turned it around on me, because when I first started, I tried to quit.
Yeah.
And I guess now I realize it's because I have systems in place. I self-educated. I'm running it like a business, that I can't see any other way to make money this easily once it's in place. But my first year, I did everything wrong. I had no systems. I rented to a friend because who can trust a stranger? I had no lease because we shook hands. And then late rent became never rent. House was trashed. Went to the house to talk to my friend who had moved out and was renting the house to someone else. And I literally made every mistake I think you can make as a new investor and tried to quit. So yes, I could see that as a reason. But now with YouTube University and people having self-education and learning the systems that we have and getting to the position I'm in, I'm now looking for reasons where people had several rentals, ran a profitable business for a few years. And I'm looking for what are the pitfalls that I can't see in front of my own self that might make me one day quit and go back to a job, because that's terrifying.
Yeah, definitely. So I've lumped it into two different categories. Now, I've seen other smaller reasons where there's like a one-off case that a landlord decided to give up, such as like COVID and the laws being really strict and out of their favor. But those are kind of those are very rare cases. There are two that I think are the largest ones I see time and time again. And the first one, you hit the nail on the head, where they're just starting out. And you have to remember, when you have one rental property or two rental properties, that cash flow you get is like, it could be $500, it could be $1,000 a month. And so you're not thinking long-term, you're sort of thinking in the short term, because like you said, Dion, you make some mistakes as you're starting to build that process. And so you're saying, I get like $500, $1,000 in cash flow. This is a lot of work. I'm not sure I want to move forward, because you don't see that future of being Dion, and where Dion is, where you say, oh, wow, this is just the easiest way to get this repeating cash flow that's much larger because you've built up a portfolio. And so I think the first is where I see folks with between 1 to 4 rental units who get started in it, and they're not looking at the long term, they're looking at the short term, saying, forget about it. I'll just go back to my W-2 job, make money on that, put the money in the stock market. It's much more passive. And for those people, I think education could really help. I think understanding tax implications. I think setting up a really strong process, even potentially just saying, hey, we're going to spend a bit more on property management, whether it is a system, whether it is a full property manager, to make it a little bit more passive as you go through. I think that's a helpful answer. So that's the first one.
So I really like that in those first few years, especially if people have an experience like mine. And it seems to be when I hear about people making their biggest mistakes is when they're first starting out.
Mhm.
I don't think it could be the $500 or $1,000 a month that they're making. I think they might be losing money for a couple of years and not see that we're not running it like a business. We're not treating our properties like we have 100 and our tenants like we only have one, right when we're starting out, in order to lose the motivation.
Yeah.
Like I think that's where it comes from. If we all started out making $500 or $1,000 a month, it might go a lot better.
Yeah. And it is actually like our good friend, Michael Zuber says, where he says, you don't want an alligator property. There are folks I have seen that have properties where they are putting more money into it. In other words, the amount of rent they receive is less than what they're paying in their mortgage. And instead of looking at that and saying, I made a bad investment decision, let me change this situation and start again, then they just give up. So that is a really, really good point, because while we don't see that as much on Hemlane, I think we will start seeing that. And the reason we didn't see it as much from when we started in 2014 to today is because the market kept going up, rents kept going up. And so I think it was a little bit more difficult for that to happen. I think now that we're in 2022, there's a market correction. I think you are right. We are going to see that more often, where someone purchased something and the numbers don't look as good because the market's not going in their favor. So I totally think that kind of 1 to 4 rental units, you'll definitely see that happen. So that's a first one. Now I think what everyone probably here wants to hear about is, well, what happens when I get to 5+ rental properties? I have 16, I have 20 rental properties. What would make it where I'd ever want to just quit and give up? I see 2 different things happen there. The first is that the properties that they have in the management they have in place is wrong. It's usually a multifamily building where they have, a 20+ complex, and they haven't been tracking the numbers or asking the right questions. And so suddenly I just had a situation yesterday where someone called about it. Squatters living in the property, they had no idea. And over time, their cash flow starts to deteriorate. And it starts to deteriorate because they haven't been checking things, cross-checking. They've kind of been like, oh, I've built up my portfolio. Maybe a property manager has changed, and they haven't realized their success in that property is making sure that they have the best process in place and they stick to that process. So if they change that process and go to like a new property manager, or have the wrong screening process to get tenants in there, that over time will slowly change our cash flow to a point where it becomes, hey, I'm almost close to losing money. This isn't as profitable as I thought it was. And so I have seen folks with 25 units say, you know what, I'm out. I'm just going to sell it. And it is because of something like that. If they had gone through the process of making sure every tenant meets their qualifications, they stick to their box. And, you have Dion that on paper, right? Like sticking to it, this would never happen. But they sort of start making exceptions because I think they get a little bit like, hey, I've got a process set up. I see cash flow every month. And they get a little bit lazy in the sense that they're not looking at those numbers and saying, am I doing the right things? Are we putting the right tenants in place? Do I have the right manager in place?
Someday I'm probably going to have a property manager.
But not today.
I like the way that you said it it seems to be a larger multifamily place, because I also think lending becomes an issue there, where a lot of people get into real estate and they've heard Robert Kiyosaki or BiggerPockets talk about the stack method, where you buy a house and then a duplex, then a fourplex, and then you 1031 into a 10 or 18 unit. Well, those 4 units or less had 30-year fixed rate debt.
Yeah.
And people learn how to calculate the yield, and they think, well, I get a better yield on this 18 unit, and it's only one property, one roof, or whatever their justification is.
Yeah.
And now you have a 5, 7, or 10-year loan reevaluation period where they're going to look at your income and say, what you either need to refinance, sell, or cut us a check for a couple $100,000 because in this 1 year, maybe you didn't have enough leases renew. And I think that's the step that a long-term buy and hold investor should skip. Unless it has 30-year fixed, 40-year fixed rate debt, I don't want to own any property. I don't want to play the gamble like we're seeing in countries outside of the United States right now. We're finding out that our 30-year fixed rate debt is our superpower. In the UK and in Canada, where loans reset and they do what they call remortgaging every 2 or 5 or whatever their system is. And look what happened to interest rates in the last year.
Yeah.
People's home prices on just home ownership can double, let alone rentals. And you can't double the rents in 1 year in most places. So I could see that as an easy reason why people would quit, is if all of a sudden the numbers don't make sense and you start losing money. And the few people I have talked to who did quit, who wouldn't come on and make a video with me, they did have 8 units or 12 units and bad lending.
Bad lending, yeah. Yeah, it's so true that it is really important to mitigate your risk. And, even we spoke about the first example of folks with 1 to 4 rental units and why they give up. It's typically because of something more emotional, where like something happened with one of their tenants and the tenant threatened to sue them, or, somewhere where they're like, oh, it's not really worth this $500,000 in cash flow to have to deal with these small cases. Once you get bigger to, 10 plus, 20 plus units, one tenant situation doesn't bother you as much because you're like, oh, I've got 19 other tenants. That's fine. I know this is an anomaly and I should screen better. But what I see happen is they become more passive and they stop looking at those numbers and making sure that they have that process in place. I mean, the 3 biggest things there is like what you said of like lending and mitigating all your risk with your numbers of anything that could be variable, then also mitigating the risk with the tenants in your property. So making sure you're screening tenants properly. And then the third is making sure that you keep your asset like in a good position where it's not deteriorating. You're not going to have some natural catastrophe with it. If you do those 3 things of mitigating risk, then it will be really passive. But this is kind of sad to say, I have seen investors, obviously not on Hemlane because it's not our model, but I've seen investors literally go on holiday and never check in on their properties. Like literally they're in a different country. And I know when you go to Thailand, that won't be you, Dion. But I've seen them go to another country and literally just totally forget to even check their statements. And then slowly over time, something happened with their manager. Something might happen with their mortgage rates. And that really comes to haunt you, where you do have to give up because the numbers aren't making sense anymore.
To take another line from our friend Zuber from One Rental at a Time, is you either spend 2 to 3 hours a month self-managing your properties, or you spend 2 to 3 hours a month managing your property manager. And that if you go to a really hands-off and you're not even checking on your property manager, I think that's a recipe for failure too.
Yeah.
So Dana, you have a ton of information, and I think people might have questions. If they wanted to reach out and get a hold of you, how would they find you?
Yeah, you can go to hemlane.com to explore our property management. We have something called resources at the top, which is an academy. It helps answer any questions you have, advertising your rental, tenant screening. So go to Hemlane, HEMLANE.com. Also, I'd love to hear from real estate investors. You can also email me. I'm better with email than I am with text. So you can email me at Dana, DANA at Hemlane, HEMLANE.com.
Awesome. And if you want to use Hemlane's product and you want to get a discount on your first year, you can use the code Dion. I hope this information at least made you think. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.